Hey there, traders. What's going on? Jamie Saettele here. It is September 2nd. It's already September. And here with the Midweek Strategy webinar with SB Trade Desk. On the topic list for today, I'm going to go through some majors. Look at the dollar index, two of them. Right now, the ICE dollar index looking a lot cleaner from a levels standpoint. Rather than the U.S. dollar index on the FXCM U.S. dollar index. What we've got going on right now is there's so many disparate things going on with the dollar pairs. I mean, the pound and euro have almost been moving inverse. Euro and Aussie are moving inverse. Recently, euro and yen are moving together. So looking at the ICE dollar index, actually a little cleaner at the moment. Look at some of the crosses that we've been, kind of putting charts up on the swings lately. Euro, Aussie, pound CAD, Aussie CAD. Mike had mentioned to me that there were some requests for, to kind of get a little more into methodology. So I'm going to talk about what I call the original slope. Okay, the importance of using the original slope. If you don't know what that means, don't worry about it because we'll get into it. All right, so first things first, we'll look at the S&P 500. Take a look here. Here's the SPX 5. This is the CFD. Trying to look at more of these charts is in the CFD because I know a lot of you trade the CFDs rather than the futures. Obviously, me being based in the US, I can't trade CFDs. I trade futures markets, in spot FX, of course. And while most of the time they're going to be really similar, there is a difference in price sometimes, especially right at the beginning of a period when a new futures contract is in place. So like right now, you can see we have futures at 1931 and a quarter. And we have the CFD at 1933.6. So there's a 2-point difference right there. In any case, this is the 4-hour chart. And remember, it's really all about this long-term picture right here, okay? Going back, I mean, this magenta line, I've shared this chart with a lot of people, and the importance of it can't be understated, in my opinion. Especially with what's going on right now with the euro and the yen and why they're moving the way they are. And again, that's not just the S&P, it's other markets too, right? The German 30, also known as the DAX. This is the CFD of the DAX, basically. And you had, this perfect touch here, sliding parallel off. These actually goes off here. So again, if we crash through this, then euro's going a lot higher. If we hold this and trade in a range for a while, which actually is what I think is going to happen, then euro's going to trade between roughly where we are now, probably about 115. It's probably going to frustrate a lot of people. If we rip higher off of this, which I don't think is going to happen because everyone is so used to that mentality, so I'm more of the mind that bears and bulls will be frustrated going into September and beyond before we try to, resolve to the downside again. But if that happens, if we go higher immediately, then euro more than likely comes off again, and trades a lot lower. And it's also worthy of explaining why. Why the market's trading the way it is, right? So people have called the euro a safe haven. You've heard that thrown around, right? The euro is a safe haven. The euro is not a safe haven. Okay, that's quite silly to call it a safe haven. The euro rallies when the DAX has been declining because most market participants have spent the last year plus, and the same goes for the Japanese yen, by the way. Market participants have spent the last year buying European equities hedged. In other words, they hedge out the euro exposure. Okay, so they buy, DAX, and they have to short an equivalent amount of euro. All right. Well, when a stock market declines, okay, their hedges actually become larger than what they have purchased in stock. So in order to satisfy that, get them back to a neutral currency stance, they have to buy back their euro shorts. It's that simple. Okay. So it's not that the euro is a safe haven. No one's like, yeah, I'm going to put my money in euro because it'll be safe there. No, it's not. It's not at all correct to say. It is correct to say that it's a liquidity, issue basically, and that people need to bring back their exposure because their stock holdings are declining, so they need to bring it in line, their currency exposure. So that's why the euro has been rallying. Same thing we saw years ago with the dollar and the S&P. Okay, people bought U.S. equities hedged. So when the markets fell, they had to buy back dollars. Everyone was short dollars. That's it. Same thing with Japanese yen and Nikkei stocks now. Same thing with euro and European stocks now. Okay. So that's that. So getting into the euro short term here, right? It's pretty simple. There's not a whole lot to make a fuss about right here. The euro, I like the euro higher from here, as I've kind of said for last week plus, but especially here, the 60-minute chart, okay? And if we just kind of scroll out a little bit and get a picture of what price action has done for the last month and a half or so, we have an uptrend, and we're kind of at that make or break point within this uptrend, okay? Looking at some of the horizontal levels in conjunction with, you've got the May high and the June high. 1 second, let this data load up. But 104.65, and this is 104.35. Okay. And then, of course, we did have the high volume level at 111.60, which pretty much pinpointed that low. We've got 112.15 or so as support. It's also the month open price, right? 112.12. I've stated many, many, many times. I am looking for entries as far as the swing up or the swing trades are concerned that I publish on these levels because, they over periods of time they do work. It's like a system almost in itself. So that's what I'm kind of looking for. We didn't get it this morning, hoping we'd get that pushed down into the 112, 10, 15 area and then be able to get long. Beige book, by the way, it comes out in like 50 minutes, I think. So still looking for support down here, okay? It's been really a quiet day. Oddly, you've had some pretty decent sized equity moves. Obviously, S&P opens up 40 handles off the lows last night, pulls back sharply, 20 something handles, turns around, rallies 12. I mean, S&Ps are kind of all over the place. Either way, we're still watching for support down here. And, did talk about, mention this yesterday. You do have a head and shoulders pattern here. It's been in, underway for 5 or so days, right? Here's your shoulder, your head, here's your shoulder, whatever. It's getting complex. It might not actually end up as a head and shoulders pattern, but whatever. It's got that bottoming look to it. And the target from this would actually be 114.60 or something, maybe 62. So that does put us up at the May high of 114.65. And that's the area I am looking towards before potentially thinking about going the other way at this point, right? You do have an impulsive decline here too. So it's quite possible that the euro, this is something like an A, B. We get a C wave rally into tomorrow, or into tomorrow, the end of the week. Remember, there's ECB tomorrow too. So, if we put it this way, if we rally ahead of that and we're rallying into ECB, I'm not sure if they're going to come out and say anything, but, I know they don't like their currency strong right now. So they might try to knock it down. So your best bet, for a short setup into ECB would be if it rallies, starting kind of here and now, right? And gets up into that level, 1430, 1460 or so before or during, the ECB announcement. Longer term, this is the weekly chart, and we're going way back here, okay, to give you a sense of just how big a low this might actually be in the euro, okay? And by the same token, if this doesn't hold, then where do you go from there? Because at that point, you could be looking, forget parity. You break this, you could be looking a lot lower than parity. You've got the lows back here, all-time euro lows, not, Deutsche Mark before that really is what this is going to chart. But, before then, euro came into existence like, basically over here, okay? But if we can break this line, then you're talking about potentially, the low 80s at that point. So obviously a weekly chart, this is long-term stuff here. It's, my thinking longer term that it's such a huge level, and that we probably try to range trade for some sort of hold on here, for a broader period. Here's the daily, and here's, I'm getting to the methodology part now, right? So same chart that was published over the weekend. Obviously, you see holding this stuff, right? I did add one there that we don't really know if it's in play yet. But talking about the original slope, okay, so original slope means basically using the first three pivots, right, off of the turn or the low. And, in this case, you're talking about the March low, high up here in March, and the April low. Okay, so those three pivots, and you use parallels and extend those off of the ensuing highs and lows within the move. So that's often case your most reliable slope. And in this case, it did end up being that. We got a little overexcited and we're looking for a lot higher in the euro, and wrongly so, right? We should have had our original slope on there. In this case, you can see original slope sliding parallel, ended up, didn't get the high. We spiked through it, but I mean, it was a crazy day and the market was spiking all over the place. Okay. So that's what I mean by original slope. The slope that you have here is defined by basically these three things, and everything else trades off of that, right? You've got lows here that are in line, these levels here in line. Would still be willing to get long, if we get a move all the way down to the 1090 region. I have no idea if that'll happen, but if we do, it should be a nice pop from there. So that's an example of using original slope. Okay, now let's move from euro real quickly to dollar Swiss, because dollar Swiss, as you know, has been a really great kind of indication. Their price action dollar Swiss has been really good at warning of pullbacks, turns, behavior changes, whatever, in broader dollar market, right? So dollar Swiss, again, thinking we might have a triangle underway from the high up here in March. Okay, and in triangles, alternate legs of triangles, and this is not always the case, but there is a tendency for alternate legs of triangles to relate to each other by 0.618. Okay, so in other words, this decline, although it didn't take a lot of time, you would expect it to relate to this decline by 0.618. Okay, and it does actually. You can see the 618 extent. In other words, if you were to multiply this price difference by 0.618 and subtract it from 0.9903, you'd be looking for the low, and it's really close. The low we ended up getting was 92.57, and 92.50 or so is actually the 618 relationship. In this case, the rally from here, 92.57, would equal the 618 extension or 618 relationship of the rally from the May low at 97.70. Well, you know what else is it? Very close to there. You've got the high volume level on 812 at 97.48. So 97.50 and 97.70 is a really big spot for dollar Swiss. We do have a new high today, okay, above the recent range, obviously, for dollar Swiss, and we do not have a new low in euro dollar. Again, this is something that's worked out, especially a few years ago, worked all the time, where you'd get lack of confirmation between these two currencies. And it's just worth paying attention to, because if we start to get back into that, it can give you a lot of good trades, especially on short-term turns. So, barring a reversal back below, yesterday's low, I'd really kind of write down 97, 50, 70 on a piece of paper and keep it on your desk for dollar Swiss, because if the market gets up there, start to expect some dollar selling. And that was in the levels, the big levels, so-called, that I gave out last on Sunday's post. That is 97, 50, 70 is in there. Okay. Let's look at the ICE dollar index now too, because it's fairly clean as far as its levels are concerned. So here's the daily chart. Okay, the trend line very clean off the top. Parallels to that, clean as support. We're now at the median line. Did not really have anything happen at that median line. So it might be worth kind of waiting for resistance slightly higher. Could take out the high here from last week on the 28th. If we get up there, you've got the slope up here, in which case you start to look lower against, into this line. Okay, so we're getting close there as far as the dollar index is concerned, the ICE dollar index, okay, as far as looking for bigger resistance. If we look at the longer term picture, weekly chart, this is the same chart you guys have seen time and time again. I still think that there's plenty of downside risk, okay? Yeah, look, old resistance here basically was support at the low here last 2 weeks ago. That was last week. But one of the, tenets of median line analysis, if you will, is that once the market hits the upper parallel, we'll often come back to test that median line. Okay, so you can see the median line here is clearly important because it was resistance back here in September a year ago, actually. And then once we broke above it in October, it was off to the races. Okay, so we have come into first support on this ICE dollar index, form of resistance. So is it possible that we just head higher straight to the moon from here? It's possible. Something to be aware of. Personally, would kind of be expecting a more important reset for this move. This move was so substantial on the upside. If you look at long-term moves in history of the dollar, typically they are interrupted by some fairly sharp counter trend moves, and we've yet to really have that. I mean, this was the biggest one we've had, and on a weekly closing basis, it really wasn't that significant. So, as far as the dollar is concerned, heading straight up from here, I don't think that's going to happen. I think we're probably in need of more of a retest of the breakout level, if you will. And the breakout level, really, it's not a horizontal level, it's the median line. Okay, this was the breakout. Okay, it's quite clear actually if you look at this in this context. Okay, so right here, failed breakout or test resistance, that was the breakout. So how low? Leon asking how low? Well, basically this median line. I mean, you know, so if we do it like this, let's try this. I'm going to attempt to answer your question, Leon. So as best I can, 1 second. I'm going to make a sliding parallel here on this ICE dollar index long-term chart. So you see how that went right there, right? It's really nice looking. Just be aware of that level. But I mean, we could be in a sideways downtrend for a long time, to be honest. But if we're looking at this from the standpoint of just quite simply a retest of the median line, which again is the breakout level, then what you're looking at is probably, well, a fib retracement of the move off of the 2014 low puts you at 87. Look, I mean, the median line is right there over, you know, the next number of months. Okay. I don't know if we get there or not, but that's what I would, is you say, you know, how low could the dollar go? If we do turn over and if this ends up being more of an important topping process before we do go higher eventually, then yeah, I'd say that the median line would be it. So that puts you 90 or maybe just south of 90. Okay. 2 legs down gives you 91, which incidentally is actually the gap from this year. So if we came back and did a gap fill, that puts you right there at 90, at 91. So that would kind of be your minimum. So this is a great question. Leon asking, how do you square DF or DX correction with being bearish pound? Right. So and Raj is in the room with Raj. You got to be positive, man. You know, it's not the triumph of the optimist, buddy. You know, take a step back, calm down. We're talking about the worst, he says, worst trading year this year. Yeah, I mean, you know, you gotta just get a hold of, calm down, you know. Be so uptight and everything. Just calm down. I'll get to pound yen. Kelly, hold on. So here's cable. So pound dollar, yeah, long-term bearish, okay? But first of all, pound and dollar can move down, okay, together. And like, I have no freaking idea. The US dollar could trade in a range sideways between where we were last week and where we are now for a long, long time, while the pound could fall further and, you know, not. To me, at the end of the day, it's about setups, right? So what happened? We're riding this median line. There's a lot of trading around it. Gives you confidence in the slope. Want to sell a rally. Okay, you don't want to turn bearish here. We've had 1, 2, 3, 4, 5, 6 down days. That's actually that's a rarity in itself. And you know, any sort of pullback into, you know, into former support, okay, well, you expect it to be resistance. So especially if it's you know, on a, you know, say on a bearish slope as well. So again, that puts us in, you know, the 155 region potentially. And, you know, let's look at the analog as well. So remember, this is the analog from that goes back to the 90s, the mid 90s, like 95. And the reason I was following that is the reason I found it was actually because, again, we had the 20-day range recently was 0.84%. That's extremely tight. Okay. And we'd only had really several times in history that we had seen a, you know, a range that tight. And one of them actually lined up perfectly with right here, this red area. Okay. Which is, I'm not going to scroll all the way back because it just takes too long. But you know, the red area, which was, again, it was in sometime in 1995. Anyway, the fake out move was the move higher. Okay, so that's the fake out move. We got the fake out move. Okay, rather than continuing to break out, we reverse like crazy. Now here's the analog. The analog actually suggests that we rally from here for a little bit. Okay, so you start to tick higher, and we are starting to do that on the short term, right? If we look at cable on the near term, you can see us here dip below that median line. We're back above it now, right? This is the one that goes way back to the highs that we made earlier. I guess this was the high of the year, wasn't? No, it wasn't. Sorry, high in June. High of the year was a little higher than that in January on the gap, but you know, start to make a base here, and again, you know, get some sort of a corrective move higher that lasts, you know, I don't know, it could last a couple weeks, right? And then that's when you want to turn bearish, pound, okay? And for me, I do think that the decline could be a little more important than the one we saw in the 90s, primarily because of this sliding parallel that we have, the red one. Okay, this is a structure that goes way back. You know, we're talking about, this is the 90s here. So the point that we were looking at as far as where the analog is with this is, it's 99, it was not there. It was, I think it was actually right here, right? Yeah. So we were following this area right here, I think. Oh no, sorry, we're following this area right here. This is where we were. So a rally into here would basically relate to September of 95 to September of now. Okay. And where you'd be looking here is probably this trend line that goes back 1984 low, 2008 low. Okay. And look, you can't help but notice that there is the potential for a much deeper resolution of this sideways of the range that's been going on since 2009. Okay, this could be a triangle. This whole thing from 2009, you know, A, B, C, flat, whatever, before you get a break that sends you a lot lower in the pound. All right. So at that point, you're just thinking about possibilities, and that's how you end up making a lot of money in FX, is by getting well, in any market, but by getting an entry and sticking with it rather than trying to trade every day or, you know, whatever. Yeah, Leon says, understand you follow patterns, analogs, but if DF corrects, can't believe pound will decline. Yeah, I mean, you know, certainly that's what I'm saying. Like maybe the pound does, maybe the dollar doesn't correct that deep. Maybe the pound doesn't correct that deep. I mean, that's what I'm saying, is like you just have to go on the possibilities. Like you don't know what's going to happen, neither do I, right? You just try to get into a position with low risk, right? Raj, you've got to, man, you've really got to, you can't be, changing everything all the time, man. Like you've really got to calm down. So, all right, Raj saying, I'm waiting for things to rally, but they never rally, and I miss out on the trend. Well, okay, Raj, the Aussie Cad example is actually, I'm not sure what you're referring to about missing it. This is what you're not missing anything. Okay, this is the chart from last night. All right, we're looking for a rally to short. It's rallying right now. So, watch for resistance. The first level to look for resistance is about 93.60. The second level, which I think is the better level, is about 94.10, 94.05. And again, here is the Aussie Cad chart. One sec here while it loads. All right, so you haven't missed anything on Aussie Cad, Raj. Okay, first of all, remember this chart that was published 2 days ago. There's a target on this thing. Sorry, it's taking a while to load the data. There's a target on this of 84.75. It's almost 1,000 pips from here. Okay, here we go. So 84.75. Now, what's the best way to get into a position on breakouts? On a retest. Okay, now look at this chart. Where's the retest? The retest would be basically this 94 area. Okay, you had 94 here. Low in January of 2014, you had 94 here. Okay, December of 2014, you had 94 here, 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 all throughout 2015 this year in April, 94, 94, June, July. Finally, we broke it the other day. Okay, so that 94 region right here is a little higher, obviously. And then if we go to a short-term chart, you can see how well it lines up with a short-term slope, which you could use to get in with entry. Okay. Now look, if you want to take a lot more risk, then go for it. If you want to go short now with 1,000 pip target and a stop at 97, risk 400 pips, that's your prerogative. I don't trade that way. I've never traded that way because let's be honest, we don't have, as retail traders, we don't have unlimited, basically a capital base to work with. So you can't take stops that wide, right? So it's important to look for, tighter risk entries, in my opinion. Okay, not everyone will agree with that. That's fine. But for me, this is the best spot to get in potentially is going to be 94. Okay, 94, 94.10 is where I'd be looking at. So that's where we are with Aussie Cad. Pound Cad, of course, continuing to potentially set up. Wanted to take a look there, see what's going on in the S&Ps and everything else. So S&Ps have continued to kind of push higher, coming up on short-term resistance here. Kind of what happens here in the next couple hours actually could be important because you've got this really sharp short downtrend going on. This is obviously from this week. So this week's downtrend. Here's another example of original slope. Okay, so here's original slope, and then using the parallels off that slope to get on the short side. Okay, and that was this morning. We opened up here. That was a trade right there. Actually tanked from there, 41 down to 16, 25 handles. Oh, Raj says, as soon as it comes 94, you short or see what's happening first. Well, again, if it comes to 94 and it's at slope resistance at the same time, then yeah, you'd probably just want to short at market, put a tight stop. You know, um, that's how I would, look to do it. If it just rallies to 94 like right now, you probably wouldn't do it because you have slope resistance that would be higher. In fact, it would be like 94.40, which is the week open price, right? But 94 is a really big spot. That was like the huge make or breakdown point, right? Considering how many lows were made at that level over the last year and a half, almost 2 years. Okay, pound CAD. So this one, kind of envision it making its, topping process here, right? Over basically since the beginning of August, over the last month or so. So you could end up with a head and shoulders top of some sort, which would line up really nicely with the levels that we've got, right? So at this point, I would be willing to actually trade on this slope, right? And this is because at this point, you've actually had some pretty good touches on it. I mean, look, it was support down here yesterday. We got that reversal. So looking for it to rally up into resistance. Resistance may be, excuse me, might be close to 205.30. The high up here we had the other day. We've also got this level. More than likely, probably be a better trade to short up into 206.30 if you got that, quite simply because that's the underside of, former support. And go into the bigger picture. The weekly chart, again, published this last night, but see how many, 10 years ago, 8 years ago, 2007, and then as recently as 2008, you've had really big moves off of more or less where we just topped, right? So topping up here outside weekly reversal, we actually had a monthly J spike too, which is extraordinarily rare. Look, it's not out of the question. The first, you would be looking for support at this line because this is old resistance. So that'd be a level to look for support first. And it's like, 198 or so. All right. So, if you're able to get, 205, 206 area, you'd be looking for 198. But if that gives up or gives way, you could be looking all the way down towards this lower parallel. Okay. Which no telling where that could be because that would be it depends on where in time it happens, right? But yeah, love the opportunity in pound CAD. And this is the theme that I was, kind of presented last week, last Monday with the absolute crazy, volume that we saw. I mean, just smells of capitulation, right? What I mean by that is I don't mean like that the stock market made a huge low and is headed higher as possible. What I mean is that there's a shift in global market and forces. Okay, and if you look at every single important turn that important turns in markets, whether in market themes particularly, are tend to happen or be triggered by some sort of a technical event, but no one sees it coming. So what happened last Monday was you had these super extended moves, which basically are Europe versus commodity, paper assets versus hard assets. Okay, so stock bond ratios is what I'm talking about. Stock bond versus commodity ratios. Okay, so look at the S&P and overlay that against the gold price. Then take something like pound Aussie and overlay that with that ratio, and you get more or less a very similar price chart. All right, so over time, they trend together, but at turn there tends to be a shock to the system that like makes it turn, and that's you get a spike higher in risk aversion and pound Aussie or something will go higher. But I'm going to make the chart for you right now, actually. All right, so let's see here. SPY, symbol, GLD. Mark says, no offense, but why not get into a long-term trade with a quarter position to be in instead of waiting for the ideal level? Well, I do that a lot, I don't publish I can't quite possibly publish all the trades that I'm doing, I try to, this is a service, and I try to provide you guys with ideas, and the trades that are published are meant to be trades that are either going to be wrong right away or you're going to be in it for a little bit. But yeah, I mean, I'm my personal money, my own account. Yeah, I'm in a lot of different things. Quite often. I'm just not comfortable giving everything out. Like what I mean by that is, yeah, if I'm short Aussie CAD with a 400 point stop or something in a really small position, I mean, what's the point of telling you, I don't know. I mean, I put the charts up, put it that way. So you have a sense for where the head's at, but yeah. Yeah, I mean, you guys got to, trading's a personal thing. You've got to use what works, for you. You can't, I'm a pretty big believer in that, simply following someone blindly is not going to work because everyone's totally different. But, it's not going to stop us from trying to give out trades. And sometimes they go really well, those ideas, and sometimes they go really bad. That's just the way it works. But, I'm not a robot. I am a human. So, hold on one second. I haven't forgot about Kelly asking about pound yen. I just want to make this chart. So one second. Okay. Almost got it. So here is the pound. All right. So here's pound Aussie against the gold. Okay, so here's pound Aussie on the bottom. Okay, and here's the gold or stock gold ratio on top. At its core, this is really, again, hard assets. Okay, against soft assets against hard assets, which really is pound Aussie is a good proxy for that. But you can look at anything, pound CAD, pound Aussie, whatever. So this is like the fundamental theme that we're working with, and that, the huge washout that we had in positions, last Monday might have signaled to be the beginning of a big change, okay? And not just the stock to gold or stock to commodity ratio potentially, but also obviously soft assets versus hard assets or pound Aussie and things like that. So that's just kind of where my head's at as far as longer term stuff is concerned. Okay. Raj asking, you use the same charts that you post for your, of course, I use the same charts, but Raj, you have to understand, man, like, you know, I mean, I've made 6 trades today, right? This is like how I live. So, but I can't possibly put out all those trades either because some of them are in for like 10 seconds, you know, maybe, selling S&Ps this morning, but again, that lasted like a couple minutes, when I'm publishing stuff like here's resistance, here's support, here's whatever, I might be doing something there, I might not. As far as giving out the specific exact trade, whatever, that's something that's going to last, that's what I'm trying to do, and I want to do it so the stop is either hit quickly or not. Okay, it's all I can do. All right, so pound yen is what we were looking at. Question here. Hi, Jamie. Is it advisable to take on counter trend trades? Well, I mean, I guess that depends on what you define the trend as, right? Here's a great example of that. So Kelly, here's pound yen. Start with like you talked about, pound dollar buying trend is lower, strong. Pound dollar buying. Well, I talked about, I think pound dollar could go higher here based on the analog, but unless there's a short-term setup that presents itself, I'm not looking to buy it, I'm looking to sell it, but at higher levels, right? So, if you get a rally and a pullback and a rally is impulsive and the pullback is corrective, then yeah, maybe we have opportunity to take a leg up higher into 155 or something. If there's a 153.50 entry at some point in 2 days or a week or 2 weeks or whenever it happens, then yeah, I'll probably do that. I can't tell you if I'll do it now or not because I don't know. But it's all about the setup. Things change. You got to be able to change with it. It's just the way it works. So here's pound yen. Here's another example of the original slope. Okay. So original slope. This is back to the lows that we had way back in 2011, right? 2011 low, 2012 high, 2012 low. Okay. This slope, a lot of people will dismiss the, after they see the market trading like above it or something, they'll like throw it out and say, well, this isn't useful anymore. Oh, that's not true. It's totally useful. Okay. You have a raised floor. I did a video on this back in like February, I think, actually March, on this exact slope. Anyway, we've come into we're coming to support. You could say support's a little lower, okay, because you do have the sliding parallel here, okay, and maybe it's closer to 182, but it's, we're in the general vicinity on a longer term for a bounce, okay, in pound yen. And you've also got what could be a new bearish structure to work with, although it's more, I'd call it more a sideways structure than a bearish structure. It's slightly downward sloping. So this is a level to really look for a bounce in pound yen. Okay, and look, eventually this lower parallel here is your big support area. Okay, when that comes into play, I don't know. It could be, it could be at the end of, if we have a real crappy, if markets do fall apart in September, then maybe we're all the way down here by then. Okay, I don't know. All I know is that right now, what I'm looking at, and this is a shorter term slope to work with. So right now, what I'm looking at is a pretty big confluence for pound yen. Okay, so pound yen, here we are, we bounced right at that level, right the median line. Okay, we've got a very, we've got a much steeper, probably this over here actually. And you see what I just did there? I just moved that. And remember, one of the guidelines I like to follow as far as the median lines are concerned is the less steep typically is going to be the right one. When you have a really steep one, a lot of times it's not valid for that long. So just and think about how markets trade. They don't, they don't trade by, in that manner, in extremely steep. New low in pound yen, not confirmed by RSI. Let's take a look real quick at RSI. So I'm assuming, are you looking at the, for pound yen, are you looking at RSI on the daily chart, 4 hour? Okay. Here, I'll take a look here in a second. In any case, Kelly and everyone else, for pound yen, the level that's going to be most interesting to me for potential short is probably 186.80. Okay, and that's the close from last Monday. Okay, it's a high volume level, very high volume level. It's high volume across any market. Basically, the close from 824 is going to be a high volume level, an important level in any market you look at right now. All right, so 86.80 would kind of be the big spot in my opinion, to pay attention to. If there's a confluence up here, if we were to get all the way up there, 86.80, what's that? Sorry, that's 88. So let's see the short term, see what it looks like on the short term. So I haven't really looked at a short term pound yen chart. Yeah, nothing's really sticking out here. Stick with the dailies at this point on this. Former low here could be some resistance. You know, 85. Okay. Now let's see what this we're talking about. This the questions on the old. And the old RSI. Okay, so RSI. You want to look at pound yen? Yeah, so there is divergence on the 4 hour. It's not the divergence I would pay attention to. I pay attention to divergence if the low is, if you have RSI above 30 at the low. So 1 hour. Same thing. Yeah, so biggest thing here is just to kind of, yeah, 185.38. Yeah, so just understand though too that we're getting into this, longer term, really big spot. So, rallies could be quite a little more substantial than people are going to expect from here, right? Especially if this is the correct thing to follow. This you've got this, fork that goes back to the December high, and then we've got the low from April here, so the yearly low and then the yearly high. So you got some really big pivots here. It was resistance up here, the crash, if you will, and then we're right into it, and we stopped on a dime at this thing, right? So, I don't know if we get all the way back here. If I would doubt it. But maybe this, 50, midpoint line on the will do it. And midline between the median line and the upper parallel, maybe that comes into play at some point near 188. I mean, if you get that, that would be, that'd be more or less, and depending on, I don't know what dollar yen's going to do, obviously, but that would be pretty much in line with the broader pound analog of getting a fairly substantial pullback before we go lower. Just kind of speculating here. So what's going on? So euros ticked up a little bit. Dollar yen's doing nothing. We got the beige book here in like a couple minutes, right? I don't know what's going to happen to the beige book. Why don't I stay? I'll stay on for I'll stay on though. Anyway, I'll stay on and look at it. Dale asking about, I like to have one long-term trade going, but looking short pound Aussie on the weekly RSI or bottom MACD getting close to crossing. Am I crazy? Yeah, I don't think so. I don't think you're crazy. So Dale, this was you're the question on your shoot, man. So remember we had the pound Aussie. We do have this long-term resistance up here. Scroll back, look at this thing. It's beautiful. So no, definitely not crazy. And same thing here, by the way. As far as Monday's close up here being resistance, okay. Yeah, and then the question on, Daniel asking about dollar yen, we'll look at that. So no, I don't think you're crazy at all, Dale, about pound Aussie. I was just going through that, in fact. So, again, even within this is a weekly chart. So even within this broad, substantial trend or whatever, a pullback even into, 211 would be shallow. I mean, so I don't think so. And look at that candle on the weekly chart. It's just screams top, if you will. And like, even if you don't know what's going to happen, obviously, but you've got a really clean area to trade against because you got the candle up there, the reversal bar. It also happens to take place right at the upper parallel of this long-term picture. So dollar yen, Daniel Wilcox asking about dollar yen, my friend. What's up? Let's take a look. So dollar yen. I think we're going for a retest personally. But in order to get that, euro, totally. So I'll get to that in a second. So here's where you're on the daily chart. Okay. Daily chart here. Okay. Dollar yen traded resistance today, what, 120.40 or so. I mean, it's all kind of has to do with what happens. It's all the same market right now. Equities, euro, yen, you name it. Would be selling up on this still. Maybe we make a new push here. For short term, pull up dollar yen, like a chart that you'd actually trade on. And here's where I would, this is a trade that this is one I would tweet out, right? So like me personally, I do have some short dollar yen and long euro dollar exposure, right? At the moment. But if we were to trade up into this and fail, this is towards the end of the day. So say we get a rip, okay, from here. We got the beige book coming out right now, by the way. A couple minutes. Oh, no, here it is. It's out right now, I think. So let's see what happens here. Let's see what happens. So I'm gonna pause for a second. Just check this stuff out. All right, so got euro here, got dollar yen right here. If you're looking to sell up here in the 50, got S&Ps right here, inching into resistance, getting fairly close to resistance as the beige book is out. Nothing's really happening right now. All right, so there we go. S&P ticking higher, so euro's coming off a little bit. Dollar yen's rallying a little bit. Maybe this will get us our entry. Maybe we can get a little dip here into 112.12 or something on this beige book. This is a short-term idea, which is starting to take shape. Well, short-term and could actually turn into something bigger picture, I guess. Remember the Euro Aussie? We were looking for exhaustion up at the volume levels, right? 62 plus. Didn't get it. This was last night's RBA. Not RBA, it was the GDP figure. And Aussie's coming off nice off the very long-term parallel. Yeah, Daniel, I'm kind of with you too, man. And this was what this had questions too about the euro, and we were talking about the impulsive nature of the decline in euro. And so, yeah, this is why another reason to suspect that euro actually, even if it's not going to go a lot higher, but it trades higher from here, right? Because we do have a pretty good looking decline, 5 waves. So maybe 5, A, B, C, right? Exactly. So A, B, and whatever. There's support here. You can go with all the freaking analysis methods you want. At the end of the day, we have support. So I want to be long euro. And it's highly skewed to the long side at this point. Because look, even if your stop is down here, like 111.70, 75, okay, even from here, which isn't a great entry, you're still talking about like 200 points of upside, probably. And that's not even a I don't even know where would the fib come in. Fibs come in at 1435, 115. So the bottom of the zone is the 50%'s in line. Either way, I'm looking towards 3565 area. Okay. So yeah, so absolutely. The weekly chart, you had a big nasty candle in that weekly chart in the euro. You had this is an impulsive decline. Okay, so yeah, it does suggest that the next rally does fail. Okay, and you know what else that suggests? That suggests that the equity markets are not going to fall apart yet, and that we're actually going to trade higher to sideways, right? And I can't stress it enough, but I've looked at the S&P chart, right? But what about the DAX chart? I mean, look at this thing; it's great. Okay, the DAX chart. Not even getting rid of, just looking at the structure from the 2009 low. Okay, and you can see if we put a parallel down here, look at that. That was the support right there, right? Boom, boom. So yeah, maybe we get some retest, maybe we sell off a little bit, and euro trades higher by 200 and something points. I don't know. But, you know, if it does, you'd be looking for support here because that's what this is. This is long-term support. All right. If it breaks, then forget it. Good night. But we're at support now. So longer term thinking here. Also, the euro, by the way, talking about analogs, and I know, you know, hopefully you guys check this out, but a lot of people have talked about the euro comparison with price action in 98 because a lot of people are likening the current situation in the equity market to 98. Well, if that's the case, then the euro is going to be in trading hell for a while because everyone's talking about the move higher here being like what's going to happen now. Well, they might be kind of ahead of the game there because if we follow that analog, it does match up pretty well, but it suggests we go sideways for quite a while in the euro. So I'm going to continue to follow that too. Where are we at here on what's going on dollar yen? 14. I mean, there's nothing really happening right now as far as markets and moving and everything. I'm probably waiting for ECB tomorrow. Probably waiting on I guess you could say NFPs potentially. Okay. And finally, we cannot forget about that Aussie dollar chart. Look at where we've hit. Boom. Hey, you never know. It's a sliding parallel all the way back to 2000. And again, here's your chart of or your slope structure from Aussie dollar, you know, and you do have a downtrend one here too. So yeah, maybe Aussie dollar trades. Maybe this is a huge low for the Aussie, right? Everyone's given up on it at this point, haven't they? I'm going to try a little experiment. So this is again, the original pitchfork and what we'd be looking at for original pitchfork, right? Probably something like this. So there you go. That's an original. So this is the original slope, okay? How many people would have probably given up on this here, okay? Even if you drew it like this, and there's, you know, you can go either way. But the original slopes, the original pivots are the most important ones to use. That is what defines the slope for the rest of the move, okay? So even if you start trading above or below the parallels, the lower parallel and upper parallel, don't forget about it. Don't dismiss it. Just draw more parallels, okay? Just copy the parallel and draw it. Okay, and that's, you can see there, support, whatever. But that's, you know, as far as people, like once the market starts trading below this, they give up. They're like, well, forget it. This isn't working anymore. Well, you don't know. It could come back to work. Okay. And in this case, there's probably two of them. You'd be looking at that one and that one right there. So, but I do hope that helps a little bit as far as, you know, methodology on slope analysis and trading with median lines. Okay. At the end of the day, it's really about finding the right slope and just hammering it. All right. Okay, so I'm gonna head out, finish this up. So getting ready for, you know, where I stand right now. I mean, I'm kind of like waiting for this, you know, I think euro dollar has to be, I think you got to look upside. Oh, thank you, sir. Thank you very much. You are quite welcome. Anytime. That's what I'm here for. Euro dollar, I think you got to look higher. I don't know if you get a better entry. You know, waiting on that 112.12 would be beautiful, right? Dollar yen, 120.50 or so might go for one more test to the high that we made last night in Asia. Obviously, Asia markets have been full of fireworks lately. So we'll, keep my eye on what happens when Japan opens and China opens. And other than that, still, kind of following Euro Aussie. Wanted to sell a little higher, might not get it, might have to sell if we get a bounce up into resistance. Your level would probably be 60.50. Okay, high volume level from last night after the GDP figures came out in Australia for Euro Aussie 60.50. And I have no problem, by the way, with being long Euro dollar and short Euro Aussie, essentially long Aussie dollar. But the play has been kind of in Euro because that's involves more risk aversion. So I don't mind doing that rather than straight out long Aussie dollar or something like that at this point. So. And speaking of which, actually, there were two charts that I totally forgot to show you guys that I wanted to show you. And that was Aussie dollar and Euro dollar, or sorry, Aussie dollar and Kiwi dollar. So besides the fact that we have that really long-term slope in Aussie, check this out. This is kind of fun. So talk about extensions of ranges, right? And when the market breaks its range, it tends to travel the distance of that range. Well, that just means that you 200% fib, okay, if you're drawing it on the chart. So what you've got here, this is the width of the range, this is the break of the range. The exact travel of the distance of this range is 69.89, low, a couple pips above there. Okay, let's do that for Kiwi dollar. This one's even crazier because the fact that we had basically a flash crash and somehow it still actually ended up bottoming right on the range or right on the measured target. I mean, like to the tick. 61.95 was the suggested low, and that was the low, 61.95. It was 0.8 of a pip off. So with these long-term slopes that we've got in Aussie, these channels and long-term upper parallel resistance in pound Aussie, Euro Aussie, the pound CAD setup, the weekly reversals, the monthly reversals, and these Europe v commodity pairs, I do think that the next big opportunity in FX is probably going to be short Europe, long commodities. It sounds crazy, but that's usually when the best idea happens, is when it's completely absurd. So, investment-wise, that implies a lot of things, of course, but look to set it up that way as far as the trading is concerned, in my opinion. And you're set up here again, high hourly close, okay, 60.48. We've broken short-term bullish structure in Euro Aussie, so could have an opportunity to sell 60.50. Okay. All right, guys. All right, take care. Have a great rest of the week. Mark, you have a good one, bro. Everyone have a good one, okay? And I'll get this posted up on the site so you guys can watch it if you want, and all that good stuff. All right, Jamie Saettele here, signing off. Bye.